Sales were up in Durham Region's real estate market in July compared to June, and at first glance that might seem like a good sign. But it's not just the month-over-month numbers that stand out. This was actually the highest number of sales we've seen in any July over the past 3 years. So what's going on? Is this the start of a magical turnaround in the real estate market? Are sellers finally willing to accept prices that buyers are offering? Is buyer confidence quietly creeping back in? In this video, we're going to take a closer look at what the numbers are really telling us. I'll break down the key changes in the market data, share what I'm actually seeing day to day while helping people buy and sell homes in Durham Region, and most importantly, we'll talk about what this means for you if you're thinking about making a move in the near future. My name is Jessie McLellan, and I make videos to help people make informed real estate decisions. So if you want to follow everything that's happening in the Durham Region real estate market, be sure to subscribe to the channel. You can also book a call with me using the link in the description to get your questions answered about buying or selling a home here. The number of new listings in July dropped 9.8% from June, which is a normal seasonal trend, but it's still one of the highest number of new listings that we've seen in any July going back to 2010. Active listings dipped 3.8% month over month, leaving us with 2,813 active listings on the market at the end of July. Again, a normal seasonal trend, but still the highest number of active July listings in the last 15 years. Sales actually increased by 4.3% from June, and this is where we start to veer off from the usual trend, but I'll come back to that in a minute. Because of the increase in sales and the slight drop in active listings, months of inventory decreased from 3.6 months to 3.3 months. The sales to new listing ratio also increased from roughly 36% to just over 41%. So while inventory levels have dipped slightly, that ratio still points to a buyer-favored market, and I expect that trend to continue. The average time it takes to sell a home rose from 21 days to 25 days, and our sale to list price ratio has now dipped below 100% for the first time since January of 2024. The average sale price in Durham Region dropped less than 1% and now sits at $885,000. Now let's talk about the jump in sales because it's the biggest deviation from our normal seasonal trend. In July, it's rare to see more sales than in June. The spring market is behind us, summer vacations kick in, and activity usually slows across the board. New listings, active listings, and sales typically slow down to some degree. So yes, we saw an increase month over month, but 852 sales is still a very low number historically. When you zoom out and look at the last 15 years, this July still ranks among the lowest in terms of total sales. Meanwhile, if you look at new listings and active listings over that same 15-year period, we're way above previous years. So while that sales bump is real, I don't want your takeaway to be anything more than what it was, which is a small blip. I always tell people watching the market, pay attention to the trends, not one-off months. And until we see that sales growth repeated consistently over multiple months, it's not a signal of anything. As for why we saw that blip, like everything else in real estate, it's likely a mix of factors. As time passes and the market shifts, it becomes harder for sellers to justify hoping for a higher price. There are more sales, more data, and more comparables. And I think that's made the market value clearer for a lot of sellers who were previously holding out. I also think the uncertainty has settled a little bit. Tariffs are still being talked about, but most people seem to have tuned it out and have an understanding of how it's affecting their daily lives. We've also seen the Bank of Canada hold the rate steady for 3 straight announcements, and that's given both those buying and selling some sense of stability. People selling aren't holding out hope for another big rate cut to boost buyer activity, and people buying are realizing rates aren't dropping big anytime soon, so it's not necessarily worth waiting. Plus, bond yields started ticking up again in July. Since fixed rates are based on bond yields, many buyers likely saw those fixed rate offers creep up a little bit, and that may have pushed a few to act before rates rose further. And finally, prices are still dropping. And every time the market dips to a new pricing tier, there are a wave of buyers who suddenly see homes come into their budget. That's how I see it, but I would love to know your opinion as well. Now, looking at the drop in active listings and months of inventory, that's not completely unexpected for this time of year. But it was likely exaggerated a bit by that slight bump in sales and the high number of terminated listings. In July, a lot of sellers who didn't want to adjust their price expectations just decided to take their homes off of the market. Unlike earlier in the year when most terminated listings re-entered the market quickly at a new price or strategy, it's more common in summer for sellers to wait and try again later, whether in the fall or even next year. Here's what I'm seeing day to day working with buyers right now. For the most part, their mindset hasn't changed much. They're still active, still looking, and still patient. But what has changed is their tolerance for frustration. More and more, I'm seeing buyers walk away from deals not because the home wasn't right, but because they didn't like how the negotiation felt. If they felt like the seller or sometimes even the listing agent is being rude, stubborn, or playing games, they're not afraid to move on. And in this market, they can. There are lots of options out there and buyers know it. So if they hit a wall with one property, they know they can find another home, often just as good, with a seller who's easier to work with. I've had a few situations this year, unfortunately, where my clients walked away from a deal over a relatively small gap in price. But within a few days, they bought a better home for a better price with fewer headaches. In past markets, that just wasn't an option. Buyers felt like they had to tolerate anything because the fear was, if I don't get this house, I won't be able to afford the next one. That pressure isn't there anymore. Buyers are standing their ground, not just on price, but on how they're treated throughout the process. They're a lot more confident and they know that they have the leverage. And I think that that is a great thing. It's also been great to see some first-time home buyers coming back to the market. Some had reached out a couple years ago, but couldn't make the numbers work. Now that prices have come down, they're finally able to find homes that fit their budget and feel comfortable taking the leap. Now let's talk about the selling side, because this is where I'm seeing the biggest challenges in the market right now. Selling your home is a big deal. There's emotion involved, there's uncertainty, and it's really hard to separate what your home means to you from how buyers are going to see it. Every homeowner thinks their home is worth a little bit more than what the market says, and that's normal. You've lived there, you've taken care of it, you know the memories and the work that's gone into it, but buyers don't have that context. They're comparing your home to others that they've seen and to the numbers that they've studied, and that's the lens that they're using. So I want to walk you through a few things that I've seen recently, areas where sellers sometimes struggle, and where I try to guide the people that I'm working with so that they don't end up in a tough spot. The first thing is pricing, and not just pricing, but the timing of it. Let's say I come over, I do a full evaluation, and we land on a price based on where the market is right now. But then you take 3 or 4 weeks to prep the home, clean, declutter, stage, which is totally normal. The problem is by the time we're actually ready to go live, the market may have shifted a little bit more. There could be 5 more sales in your neighborhood, so we need to revisit that pricing right before we list. Even just a few weeks can make a difference, especially in a market that's still correcting. If we ignore what's changed, we risk coming out overpriced. And in this market, that can cost you both time and money. The second challenge is something I hear all the time. Let's just try a higher price and see what happens. And I get it, no one wants to feel like they're leaving money on the table. But I've seen this play out so many times, especially on listings that my clients on the buying side are interested in. They try a stretched price and 2 or 3 weeks go by without strong interest. By the time they reduce to the number that they probably should have been listed at in the first place, other homes have sold for less. And now they need to be priced even lower just to stay competitive. And we've absolutely had agents reach out a few weeks later asking for our offer back. All it takes is one neighbor selling for less, and buyers will use that as the new benchmark for your street or your neighborhood. The third thing to consider is staging, and more importantly, how your pricing affects your staging window. In my business, I pay for professional staging because I know how much of a difference it makes. And I bring in stagers who also have interior design experience, so the home doesn't just look good, it appeals to the majority of buyers. That staging contract usually covers 6 weeks, and that's plenty of time to sell a well-prepped, well-priced home. But if the home is overpriced and we spend the first 3 or 4 weeks getting little to no interest, now we're in a crunch. You either need to pay to extend the staging contract, which can be expensive, or remove the furniture entirely, which often hurts your chances of selling for top dollar. You never want to see a seller stuck in that position, especially because they didn't do anything wrong, but just because they didn't fully understand how fast things can shift in this kind of market. And finally, let's talk about price reductions. This is one of the trickiest conversations to have, but it is an important one. The point of a price reduction isn't just to say, okay, we'll come down a little. It's to reach a new group of buyers who weren't even seeing your listing before. So if you're listed at $840,000 and you reduce to $830,000, you haven't moved into a new price tier. You haven't reached a new audience. You've just nudged the price for the same group of buyers who already saw it. And if they didn't think it was worth $840,000, $830,000 likely won't change that for them, because truth be told, with the buyer mindset right now, if they thought it it was worth $830 and it was listed at $840, you probably would have already seen that $830 offer. Meaningful reductions, the ones that bring new activity, usually need to be in the range of $25,000 or more, depending on your price point and your area. I know that sounds like a lot, but small price drops don't solve the problem. They unfortunately just drag it out longer and usually cost you more in the long run. If you'd like to speak with me about buying or selling a home in Durham Region, or even if you just have a question about what's happening in our market, you can use the link in the description to book a call with me at a time that works best for you. Subscribe to the channel and hit that like button if you enjoy videos like these and you want to stay up to date on everything that's happening. Thank you for watching until the end, and I'll see you in the next one. Bye.